Hello friends, a very warm welcome to my channel. In this video, we are going to analyze Paradeep Phosphates, which is a non-urea based fertilizers manufacturing company. This was chosen in a Telegram poll recently with over 500 votes. Now you can watch our videos in Hindi also. In the settings button, there is an option to choose language and you can choose Hindi as your preferred language. If you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that we upload. Here's a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion today. We'll discuss the business model of Paradeep Phosphates in the beginning. Then we'll look at the stock performance since listing, the financial performance in the last 5 years, the reasons why the stock has given such a sharp rally in the last couple of years, the outlook of the management going forward, the valuations, the risks of investing in this company, and then form an overall view. So Paradeep Phosphates is India's second largest private phosphatic based manufacturing company. Now what's a phosphatic fertilizer player? It's a company which manufactures fertilizers where phosphorus is the main element. So this video will contain some technical terms. I will keep explaining the meaning of those terms as we go along. So right now the installed capacity pre-merger is 3.0 MTPA. Now why are we mentioning pre-merger? Because this company has announced a merger with another listed company called Mangalore Chemicals and Fertilizers Limited. They have two manufacturing units. Odisha unit has 1.8 MTPA capacity and Goa unit has 1.2 MTPA capacity. Their main products are DAP and they also manufacture multiple NPA grades. Now what is DAP? DAP is diammonium phosphate. It's a very common fertilizer used in India which has mainly two elements, phosphorus and nitrogen. Now what is NPK? NPK has three elements mainly, nitrogen, phosphorus and potassium. In NPK, the company manufactures various grades suitable to different crops in India and one of their main selling product is NPK 20. The Goa unit also has a capacity to make 0.4 MTPA worth of urea. They have two brands, Jai Kisan and Navratna. They have a very wide distribution network in India. They operate in 15 to 16 states, more than 95,000 retail touchpoints they have, and they have sold their products to more than 9.5 million farmers. If we talk more about their products, they have core products. Like we discussed, their high volume product is DAP, and crop wise, region wise, they have multiple grades of NPK. Now coming to the new products which the company is manufacturing, their first product is triple super phosphate, which is in short called TSP. This is a fertilizer where there is high concentration of phosphorus. The other range of new products which they are manufacturing are biogenic nano fertilizers. So these are very tiny fertilizers which can be used for spraying on the plants or the crop instead of putting the fertilizer in the soil. In these new value added products, the margins are higher when compared to the traditional products. There are a couple of things unique in this company. They are largely backward integrated, which gives them a hedge against the fluctuation of raw material prices. Phosphoric and sulfuric acid are manufactured in-house and captively consumed. Another unique point about this company is they are located very closely to a port. So in terms of logistics, in terms of transporting that cargo from the vessel to their factory through conveyor belts is very easy, hassle-free and very cheap for this company. Both these points lead to higher margins in this company compared to its peers. Now let's talk in detail about the merger that this company is undergoing. They are getting merged with a company called Mangalore Chemicals and Fertilizers. This was completed in October 2025. Their capacity will go up from 3 MTPA to 3.7 MTPA. They will get larger distribution network, stronger one in South India, wider range of products. And of course, there will be some synergies in scale which come in and the margins will also benefit. This purchase is done through share swaps, so there is no monetary outflow from the company. And FY26 will be the first year, at the end of this year, that will be the first financials wherein the consolidated results would be published. Then you will get a more clear picture of the P&L and balance sheet post-merger. Here are some photos of their products for you to understand better. Another concept you should understand before you analyze such fertilizer companies is this sector is regulated in terms of price by the government. Urea is fully regulated by the government. The government sets the MRP for urea. So the companies don't set it. In the P&K fertilizers which this company manufactures, there is partial regulation from the government side. The government sets a subsidy level which is paid to the sellers of these products. And the company has freedom to set their own MRP. So based on the subsidy which they are getting from the government, different companies manufacturing these fertilizers set the MRP. So the realization which the company receives is a combination of two elements. The first is the subsidy from the government and the second is the MRP which is paid by the customer, which is the farmer. This is not so in case of pesticides where the prices are market driven. So this is a simple explanation of their business model of the company. Now let's look at the stock performance in the last few years post listing. This company was listed in 2022 at the price of about 42 rupees. From there it has given a massive rally and created good amount of wealth for its shareholders. It made a high of more than 200 rupees and right now it is trading at around 177, and the nearest support zone for this stock would be around 150 rupees. Now let's look at the last 5 years financials. In FY21, the company did a revenue of about 5,165 crores. This increased to 13,341 crores in the next 2 years in FY23. From there was a dip to 11,575 crores in FY24 and then bounced back to 13,820 crores in FY25. In the last 5 years, the revenue grew at a CAGR of around 27%, which is very impressive. Now, what is the reason for the dip in the revenue in FY24? Primarily, there were two reasons. The first reason is that realization per ton drastically decreased. So there was volume growth, but in terms of value, the sales showed decline. The second reason was there was a reduction in the subsidies given by the government. That also impacted the value terms of sales of the company. EBITDA also shows a similar trend. From 549 crores in FY21 increased to 816 crores in FY23, down to 672 crores in FY24, then doubled to 1271 crores in FY25. Margin flow is interesting. It was 11% in FY21, came down to 6% in FY23, which is nearly half, and then bounced back to 9% in FY25. Now let me explain this, why this happened. And this is very important for you to understand in these businesses, because the margins can be highly volatile. So you have to play the right cycle. So the decrease in the margins were due to three reasons. The first is that the raw material inflation, that is the increase in the raw material prices, were faster than the rate at which the company could hike their MRP. So the margins compressed for a shorter period of time. The second is that the subsidies did not increase at the same pace at which the raw material prices were increasing. So that also compressed the margins. And the third reason was that the new manufacturing unit in Goa was not fully ramped up. So in the initial days, the expenses were on the higher side. In fact, the right way to look at margins for this company would not be in percentage terms. It is always good to look at EBITDA per ton in such companies. The ROC is around 13.7%, which is slightly lower, not very impressive in this business. Promoter holding is around 56% and part of it is pledged. Debt is very high. Debt is more than 1 time debt to equity, although net debt would be slightly lower. They had around 4,358 crores of debt in the balance sheet as on March 31st, 2025. Cash flow conversion is okay, I would say, but that can be better. It is around 47% EBITDA to OPCF conversion in average in the last 5 years. One good thing which we observe is that the promoters bought from the open market through a bulk deal 1 crore shares at 182 rupees, amounting to around 182 crores in September 2025. What led to the rise in the stock price in the last couple of years? Performance was consistent. The sales and EBITDA both increased in absolute terms in the last few years. The valuation saw a re-rating because of the good performance of the company, because of the capex plans they announced, the new products that they added, the merger they announced. So all these factors led to the rise in the stock price. And also the sector had tailwinds as the cycle moved from a down cycle to an up cycle in the recent couple of years. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my views on the market. I discuss a lot of important news, share sectoral views. More than 9,000 people are in touch with me daily on our Telegram channel. Now let's discuss the growth outlook of the management going forward. In terms of volume, they say that in FY26, they will do more than 3.1 million plus. There will also be an increase in the revenue and profits due to the merger of Mangalore Chemicals and Fertilizers Limited during this year. So consolidated financials will rise. But you'll also have to remember that it's a share swap. So the equity and market cap will also increase. So you'll have to see the valuations post the merger at the new market cap or at the new equity capital. EBITDA per ton would be around 5,000 per ton this year. So you can multiply it with sales to get the absolute EBITDA which the management is targeting. They are increasing the capacities of sulfuric acid as well as phosphoric acid, which are the raw materials captively consumed by this company. They will change the product mix to the newer products more towards TSP and nano fertilizers, which are higher margin products. But they are not giving any specific guidance because there are a lot of variables in this business in terms of price of raw material, finished products, government subsidies. So giving an absolute number is difficult for the management, but overall they sound quite positive for their business in the next couple of years as well. Now let's talk about the valuations, which is another tricky part in this type of businesses. I would look at valuations in such companies not through the regular PE ratio lens. I would look at it from two angles. The first one is EV/EBITDA. The second one is price to book. Now, why I am choosing these methods is because this is a cyclical business and you have to sit at the right time in the cycle and come out at the right time in the cycle as well. So if you look at the price to book post listing, it was hovering around 1 to 1.5 times for some time and went up to 5 times price to book, and right now it trades at around 3.5 times price to book. So I would say in terms of this ratio, the valuation re-rating is partially over. In fact, more or less over. In terms of EV EBITDA, it has a median range of around 12 times in the last 2-3 years. And right now it is more or less trading at that similar range. Now, if I compare these ratios with the peers in the listed space, I get the same feeling that the valuations have more or less re-rated according to the performance of the company in the last couple of years. Now, what does that mean? That doesn't mean that the valuations have become very expensive. I am trying to say that the valuation gap from undervalued to fairly valued is filled in the last couple of years due to the increase in the stock price that we saw. But from here onwards, if the earnings continue to rise about 20% as they have done earlier in the last 5 years, there can be further upside in the stock similar to the earnings growth. But there are a lot of variables and risks to monitor in this company, which we'll discuss going forward. Certain raw materials are imported by this company, so availability of those raw materials, the foreign exchange currency fluctuations will impact the business margins. A lot depends on the government policies, subsidies, etc. The government will give subsidies, but the recovery of the subsidies takes time sometimes, which impacts the working capital and the debt of the company. Monsoon, this business is both cyclical and seasonal. Cyclical in terms of the broader 2-3 year cycle, seasonal in terms of how it behaves within the year. So if there is a good monsoon, there will be higher demand of fertilizers. Bad monsoon, bad crops, the lower demand of fertilizers. How they integrate this new merger that is happening will be critical to watch. The promoters' pledge has to be monitored. There is stiff competition in this industry. So if the industry is in an up cycle, everybody earns. And in a down cycle, they start cutting each other's prices. Recently, there was a search by the customs department in the company. So such kind of risks also exist in this business. So you've understood the business model of the company, the growth prospects, valuations, risks, financials. What is our overall view on the stock? If you're holding the stock from the lower level, you have made enough money. I would suggest you to put a trailing stop loss. Although we are not at the peak of the cycle yet, there is some upside left in the cycle as well. So play the remaining cycle, but keep a trailing stop loss to protect your gains. But if you're looking at a fresh entry, at these valuations in the stock, it is not something which is very undervalued, and you're not at the bottom of the cycle waiting for it to turn. You are in a mid cycle and the valuations are also kind of slightly over fairly priced. So it would be good for you to accumulate in a staggered manner so that you try to buy cheaper than the currently fair valued price. But at the same time, since you are entering at the middle of the cycle, it will be very important for you to closely watch signs when the cycle is coming to maturity. Whenever you see the raw material prices falling, whenever you see a bad monsoon happening, whenever you see the government reducing subsidies, whenever you see the realizations falling of these products, that will be the first sign for you to exit. But if you are somebody who doesn't want to monitor the stocks and companies so closely, then consistently growing businesses are more suitable for you as an investor than these cyclical stocks. So that's about Paradeep Phosphate. I hope you like the crisp analysis. I've tried to simplify this cyclical business in as simple words as possible for you. If you like this simple analysis, hit the like button and subscribe to our channel. Do join our Telegram channel. Share your suggestions for the upcoming videos in the comment section. Even this was picked up from the last video's comments. Thank you for watching and have a wonderful day.